In this module, we are going to give you an overview of the two key methodologies of picking the stocks to build a winning portfolio. The first one is fundamental analysis and the second one is technical analysis. Both of them look at different indicators and assess the stocks and companies in slightly different ways, but to arrive at the same result of picking the right stocks. After going through this module and the topics 1 and 2 of this module, you can take a decision of which methodology suits you. Ideally, a balance of both methodologies should be used to pick the stocks for your portfolio. What you will learn: you will get an overview of fundamental analysis. What is fundamental analysis? What is the purpose of fundamental analysis? Why is it done? And how is it done? An overview of technical analysis. What is it? What is the purpose of technical analysis and how is it different from fundamental analysis? And then what are the next steps for you to follow? So what is fundamental analysis? Fundamental analysis refers to studying of various quantitative and qualitative factors like economic analysis, industry analysis, company analysis, even macroeconomic factors like GDP, inflation, government, economic and RBI policies, doing an in-depth financial analysis with the ratios that we have studied in the previous chapters, and understanding that sector or that industry's growth. All of this and the study of all of these different factors that affect a particular company is called fundamental analysis. Quantitative factors of a company like profits, revenues, costs, future cash flow projections can be obtained through the ratios, through P&L and balance sheet statements of a company. Qualitative factors of a company and understanding those in details can be seen or can be assessed from various references, from business articles, from any stakeholders that you might know in the company, etc. So we'll see about how these different factors can be studied and can be analyzed. The fundamental analysis framework, let's look at the qualitative framework. To assess the qualitative factors of a company in detail and assess its future prospects of a company, we need to compare that company with its competition and the economy at large. We need to understand the business model of that company. Questioning the source of profits and revenue is important. Analyzing the company's core operations will give you a clear picture into the business model of that company. Where is the profit coming from? How is the company making revenue? Is it a loss-making or a profit-making company? All these questions are relevant, and going deeper and deeper into understanding the entire business model, the supply and the distribution chain will give you a better idea of what the company does to make money. Understand the management. Question the background of the team. Do a reference check. Where is the senior management coming from? What has been their previous experience? Have they been successful in their previous ventures? If they have been, then it's likely that they are going to be successful in the near future as well. Is it a family run business or a professionally led company? How is the culture of this company? Get to understand the company culture through the people you know who may work in that company, or some references or your network of friends and family. Understand the industry in which the company functions. Understand if the company strategy is in line with the recent trends that are happening in that sector, or will it lose revenue badly because a new company has innovated and changed the sector dynamics completely. For instance, will the free voice and data scheme of Reliance Jio affect the functioning and the profitability of Airtel? Keeping a track of the sector, the industry, and the new innovations happening in that sector is key to understanding the business model and the profitability of a company. Competition analysis. This is the core to understanding a company's functioning. Understanding the positioning of a company and its USP as compared to its peers and competitors will give you an in-depth insight on whether the company is likely to make higher revenues and hence higher profitability in the near future. The company may be loss-making right now, but it may be still a good bet for the future because it's innovating and building its business in a way that no other company or peer is doing so in that sector. Plus, if it is changing the way the sector dynamics work and if business is done in that industry, then you need to question how easy it is to replicate it by another company that will enter that sector. Is it easy for a new company to innovate and build the business the same way this company is doing, or are there higher barriers to entry? What is the cost in terms of money and resources and time spent to replicate this company's business model? Let's understand the quantitative side of fundamental analysis. Pick up the balance sheet and the income statement of the company and do all the ratio analysis that we have studied in the previous chapter to ascertain the financial health and performance of that company. Understand the EPS trend over the last 3 to 5 years. Has it been steady or has it been rising? Compare the P ratio of that company with the industry and competition. How does it look like? Does it fare well, better or worse as compared to its peers? Compare the debt equity ratio to the industry and the competition. Is this company highly leveraged as compared to its peers? Has it taken too much debt? If it has, then why is it so? Is it building its business or is it just unable to repay its debt? Understand the ROE trend and compare this ROE with the industry over the last 3 years. Understand the dividend yield and compare it with the competition over the last 3 years. Has the company been giving away dividends or has it been again investing to build its future? Questions like these will help you understand the financial health of the company and then understand whether the stock. So, what is the purpose of fundamental analysis? Why are you doing this? You've studied how qualitative analysis can be done, how quantitative analysis can be done of a company. But do you understand really why are you doing so much of in-depth analysis of a company? Let's just summarize these points here. You're doing an in-depth analysis to understand the intrinsic value of a company. The intrinsic value is the real value of that company and is not usually reflected by the stock price on the stock exchange. Stock price on the stock exchange represents a speculation and the investor interest. But the real value of a company comes by studying the business model and the financial ratios of the company. To make long-term investment decisions, fundamental analysis is a great tool. It's a great scientific method to understand the health of a company, both financial health and qualitative softer skill health that we say, that is understanding the company management, understanding the industry, the sector. It is a great tool to understand how the company is going to function in the future and what are the future prospects of the company looking like. To reduce your losses and maximize your profits. So fundamental analysis helps in determining the real value of a stock. Once you compute this value, you know that any price below this value is a bargain and anything above is a premium. You can enter and exit a stock accordingly, which helps you reduce your risks and maximize your profits. That's it on fundamental analysis. You should start going on to Track Invest platform and start picking the right stocks basis what you've learned in the previous chapters and what you've learned about fundamental analysis in this chapter. In the next chapter, you will learn about technical analysis and how to pick stocks through technical strategies. Thank you.